Hello, everybody. You can call me Hunch, and today I'm bringing some sweet knowledge to your dome. Is that right, Tyrone and Mr. Biggs? I think so. Today I'm going to talk about why I think Stacks is the most undervalued L1 or L1.5, as Muneeb, the founder, puts it, and why I think it's going to do what Avalanche did based on the charts and based on the fundamentals. Let's dive on in, shall we? Okay, here we have the chart. This is the Stacks chart. As you can see down here, we had a long period of consolidation. It broke up. It kind of trended sideways. Then it broke this line of resistance. This is important. Take a look at this. I think it's starting to break it, and I think it's just going to fly from here. You know, pull back a little bit, but it's going to trend upwards. Now look at the Avalanche chart. I just want you to see how similar this is. And if you're new here, I try to compare two similar tokens like I did with something like Chili's and Decentraland, which are two metaverse tokens. So now I'm doing two L1s. Look at the consolidation here. It's just beautiful. It breaks up, trends sideways. Look at the trend sideways here, right here. Okay, compare it to here. It breaks the line of resistance. Look at the line of resistance between Stacks, which is what I'm on, and Avalanche. Okay, I think it goes up what Avalanche does. A further support for this thesis is that Stacks is like at least 75% less of a market cap than Avalanche, right? So there's so much room to grow. Let's further dive into this though. New York City coins. So basically, there's something called City Coins, and it's built on the Stacks network to help fund projects around the city or give back to the citizens if they have productive output, which is my theory, which they're going to do. And then they can also, the city can use their stacks that they receive from the City Coins to build up their Bitcoin and Stacks reserve, which is incredible because it makes every city almost a sovereign nation and financially stable, in my opinion. So now you had Miami coin, now you have New York City coin. You could take a look at this little graphic. The miners, you know, put up the stacks, they get New York City coin in return. Stackers get New York City coin, and the city gets a Stacks wallet, which then they can stack for Bitcoin, hold the stacks, they could sell at any point. They give a nice little description down here if you really want to look further into it. Then I want to give you one more point to think about, right? The market cap of Stacks is anywhere from, I think, 2.5 billion to 4.5 billion, right? Here's the GDP of Miami, right? So what is the GDP of the digital part of Miami? It's probably still huge, right? And if you can use Miami coin or New York City coin, which they've talked about, to use it for NFTs, ticket sales to sporting events, authentication of city gear like shirts, t-shirts, you name it, right? They can build it on those coins because they're smart contract type coins with the Stacks network. Then look at the GDP of of New York City. This is crazy, the opportunity. I'm telling you, I think Stacks over the next, you name the time period, short to medium term to long term, I think it's at least going 10x. It could go, anywhere from 30 to 100x, to be honest with you. This is not financial advice, but this is the best opportunity I've ever seen in crypto. You can have your Bitcoin, you can have your ETH. This is, a venture capital bet. As they say, everything outside of Bitcoin is a venture capital bet, but I think this is a good one. I'd go for it if I were me, and I am. Not financial advice.